Hi, it's Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Ken O'Keefe, who's Managing Director of Russell Index's Investable Products. It's great seeing you, Ken. Thank you. And it's an exciting time in the index space with this recent news about Vanguard jettisoning almost 20 indexes from MSCI and moving over to FTSE and another index provider here in the US. Exciting news for the space. So you as an index provider, what do you think? Is it getting more competitive?
Well, first of all, thanks Tom for having me here today. And there's certainly has been a lot of press, focusing on that announcement. But for me, and I've been in this business for quite a number of years, it's like deja vu all over again. Okay. Right? About roughly 10 years ago, Vanguard had a business issue with S&P and switched money to their funds to MSCI-based indices. Okay. 10 years later, they have a business issue with MSCI and they're switching their funds to CRSP and FTSE indices. Right. And my point in that is that it's not that the index business is getting more competitive, it's always been competitive. And that's what I mean by it's deja vu all over again. And that competition is really good for the ETF provider, for the financial advisor, and the end investor. Competition is good.
Great. So you see it. It's part of the business. Yep. It doesn't scare you at all. Nope. No. And ultimately good for the end investor.
Absolutely. Competition is what drives American capitalism. And what index providers need to do now is continue to innovate either on their current products, new products, and that innovation has to go with education to make sure that end retail investor and the financial advisor know exactly how to use those products in their portfolio. Right.
Well, speaking of innovation, you know the ETF business pretty well. What areas of the ETF market do you think the industry needs to work on? Are there gaps out there the way you see it?
So I wouldn't see that there are significant gaps. I mean, if we were talking about 10 years ago, yeah, there were some core parts of the waterfront that weren't covered. So now there aren't big gaps in the waterfront. But there needs to be that continuous innovation. We continue to, for instance, to continuously improve the core Russell 1000, 2000, and 3000 indices. We continue to launch new indices like Russell Fundamental, Russell Equal Weight. Continue to work closely with our partners on, let's say, our Mega Cap 50 index. So those are some of the examples of areas where we continue to innovate, and then it all has to come with education that's meaningful to the end investor and to the financial advisor.
Yeah, you're right. It's all about education. But do you feel like we're being too creative in the ETF space? Are we slicing and dicing sectors too much, or having 25 different volatility ETFs, is that too many?
I'll go back to the early comment of competition is good and choice is great. Having said that, when Russell launches a new index, we're always careful to not launch the flavor of the day. Right. Yeah. We're definitely looking for indices that have a true benefit in your portfolio, the end investor's portfolio, and has a clear-cut methodology to make sure it's easy to understand, simple, transparent. Okay,
so Russell indexes very, very, very well known on the institutional side. I'm hearing that you're doing a lot more to reach out to the retail investor and also the financial advisor. Can you tell us a little bit more about your thoughts and as far as your efforts there?
Sure, absolutely. So Russell's blessed to have a brand that actually is known well on both sides, institutional side and the retail side. Having said that, are we happy with the awareness that we have on the retail side, or with financial advisors? No, it has to be higher. If you did a poll, roughly 85% of financial advisors would be aware of Russell, 70% of them would recommend Russell-based products, but we want that number to be higher. So what you're going to see from us is a lot more of that same education that I'm talking about, but most of our education, our white papers, are written to an institutional audience. And therefore, they're 20 pages long. They're written by PhDs, right? We've got to take that same quality information and bring it down to something that is much more soundbite-ish. Yep. And those soundbites could be a 2-pager, a 3-pager, right? And then the other things, of course, is making sure we're getting out there in the media to make sure people get that message, right? Yes. So that's one of the reasons why we're at this conference, right? Conferences are big in terms of educating financial advisors. And you're going to see Russell indices much more frequently in, if you big media publications like we recently were in USA Today, we're on CNBC on a regular basis. You'll see much more of that from Russell and much more education targeted to the financial advisor.
Well, we look forward to seeing more of you, and thanks for spending some time with me today, Ken.
Thanks so much, Tom.
This is Tom Lydon, editor of ETF Trends.